My name is Rick Campbell, and I do a presentation on Dow 30 companies to select which company would be best for investment. And the company I chose is ExxonMobil. A little background on ExxonMobil. ExxonMobil is the world's largest company by revenue. In 2013, became the largest publicly traded company by market cap in the world. ExxonMobil was formed in 1999 by the merger of two major oil companies, Exxon and Mobil. Both Exxon and Mobil were descendants of the John Rockefeller Corporation Standard Oil, which was established in 1870. My decision criteria was companies that fall on the efficient frontier to choose from. When picking a company, it also depends on risk preference when determining desired return. I look for increasing ROE and increasing ROA as well. The measure of risk I used was beta. I compared it to a common competitor in the industry, which is Chevron. As you can see, Chevron has a higher beta of 1.1, and ExxonMobil has a beta right at 1. This means that the volatility of Chevron is equal to the volatility of the market. Return on equity, I also compared ExxonMobil to Chevron. As you can see, ExxonMobil has a considerably higher ROE at just below 30%, and Chevron is at 20%. ROA is another important factor, even though ROE is the most important ratio to look at. You can see ExxonMobil is also slightly above Chevron when looking at return on assets and asset efficiency, how they use their assets to generate net income and sales. ExxonMobil, this is a further comparison, a wrap-up of its main competitor, Chevron. In 2012, Chevron had a lower ROE and ROA when compared to ExxonMobil, and Chevron's beta was higher than ExxonMobil. The DuPont analysis, the most important when looking at companies, you can see their ROE went from 17.25 in 2009, it jumped to 28 in 2012. Interest burden, which made the driving factor of ROE in ExxonMobil's case, jumped from 132% to 157%, meaning that they generate more interest income than they have interest expense. Tax burden, there was no major change. EBIT margin increased from 9.5% to 11.86%. Asset efficiency, they used asset efficiency more effectively from 1.19 to 1.27, and equity multiplier has remained consistent for 2009, 10, 11, and 12. This is further analysis of interest burden, showing that interest burden of 1.57 means that ExxonMobil had 1.5 times more interest income than they did interest expense. This is maybe the top driving factor of ExxonMobil's ROE. Now on liquidity for ExxonMobil, they had a current ratio of right at 1, meaning that their current assets were equal to current liabilities, and this may be due to the fact that the oil and gas industry has very high expenses and equipment used to drill oil. The quick ratio of 0.69, and cash is the smallest portion of current ratio at 0.149. Profit margin of Exxon is increasing from 2009 to 2012. Profit margin of 10.67, made up by 15783 of interest burden times 57.01 of tax burden and 11.86 of operating margin. Market statistics. The Exxon share price was $88.21 on 4/29/2013. Exxon had the largest market cap of companies I looked at of $392 billion. The 52-week range of stock price fluctuated from $77.13 to $93.67. Estimated target price. Got the estimated target price from Yahoo Finance. That's $8.02 per share. Use the estimated earnings per share times the PE ratio of 11.95 to come up with $95.80. ExxonMobil stock price, as you can see on the last slide, was $88.21. Earnings per share equals net income divided by number of shares outstanding. As you can see on their supply chain, they have 71 suppliers, major suppliers being Oracle, Rolls-Royce Holdings, SAP, AG. They have 18 customers. ConocoPhillips, and you can see Safeway, that's common gas stations and companies that they supply to. This is a recap of the last slide. 71 suppliers, and it talks about the main suppliers: Flowserve Corporation, Oracle Corporation, and customers include ConocoPhillips, Safeway, and many more. This concludes my presentation. In the end, I believe ExxonMobil is a very good company to invest in, high ROE, increasing as well as increasing ROA, and it'd make a very good investment. Thank you.